Hey traders, welcome back to the channel. Today, I'm pulling back the curtain on the single biggest shift in my approach. A change that didn't just improve my results, it completely transformed my entire trading career. I'm talking about the exact methodology that allows me to consistently identify and execute multiple, clean, high-probability trades almost every single day. This isn't about luck or some magic indicator. It's a systematic approach that turned trading from a source of anxiety into a predictable, profitable business. You see, while most pure swing traders are stuck sitting on their hands for days, sometimes even weeks, just waiting for that one perfect setup to materialize on the daily chart, I'm actively capitalizing on the market's rhythm. I call myself a hybrid trader. This isn't just a catchy name, it's a philosophy. It means I harness the high-level perspective of a swing trader, but I strike with the lethal precision of an intraday sniper. It's the best of both worlds, giving you structure and freedom simultaneously. But it wasn't always this way. Let me take you back. I was the textbook swing trader. I'd spend my Sunday meticulously analyzing the weekly and daily charts, identifying my key zones. I'd set my price alerts, and then the waiting game began. The anticipation was agonizing. And when I finally got into a trade, I'd have to watch it slowly, painfully crawl toward my take profit over the next 3, 4, or even 5 days. My capital was locked up, and my mental energy was drained. All the while, I could see countless other profitable moves happening on the lower time frames, all that beautiful, clean volatility just passing me by. I felt like I was leaving so much money on the table, and I knew there had to be a better way. So let's break down the engine behind my trading success. The weapon of choice? My hybrid strategy, which masterfully combines the 4H, 15M, and 3M timeframes, all working in perfect harmony. I want you to think of yourself as a military sniper operating with precision and patience. This isn't about firing randomly, it's about calculated execution. The 4H chart is your high-level battlefield map. It gives you the strategic overview, showing you the major zones where the big battles will be fought. The 15M chart acts as your powerful binoculars, allowing you to zoom in and spot potential targets as they emerge. Finally, the 3M chart is the high-powered scope on your rifle, giving you the pinpoint accuracy needed to take the shot with minimal risk. My trading day without fail begins on the 4H time frame. This is my anchor. I'm meticulously scanning for high-probability market structure and key points of interest. Specifically, I'm hunting for fair value gaps. These aren't just random gaps. They are the footprints of institutional capital created by strong impulsive moves that leave behind imbalances. This first step is absolutely non-negotiable. I completely ignore the noise on the lower time frames until price has entered one of my predefined 4H POIs. This single rule is my shield. It protects me from emotional decisions, prevents me from chasing mediocre setups, and forces the market to come to. It's the foundation of disciplined trading. Once price finally taps into my 4H fair value gap, the hunt begins. I zoom into the 15M chart, and my mission here is singular: to find confirmation. I'm patiently waiting for a clear market structure shift, or a change of character, that aligns with my expected direction. For example, if price is in a 4H demand zone, I need to see it decisively break a recent 15M swing high. I need to see a strong, convincing candle body close above that level. That powerful break is my first piece of evidence. It's the market telling me, yes, this 4H zone is holding and buyers are stepping in. This step validates my higher time frame thesis. This next step is where the amateurs get sloppy and the professionals get paid. After the 15M confirmation, I drop down to the 3M chart for my sniper entry. Why? Because while the 15M chart confirmed the 3M chart defines my. Inside the new zone created by the 15M move, I am looking for one final micro-market structure shift. This refinement is what allows for surgical precision. It accomplishes two critical things. First, it allows me to place my stop loss in an incredibly tight, logical place. Second, by shrinking my risk, it dramatically magnifies my potential reward. Instead of a standard 1 to 2, this method consistently puts me in positions to capture 1 to 4, 1 to 5, and on clean moves, even 1 to 8 or higher. This is how you build an account. Let me walk you through an actual trade. Price tapped a significant 4-hour demand zone, our high time frame anchor. Instead of jumping in, we wait. On the 15-minute chart, a bullish change of character confirmed buyers were stepping in. This shift in market structure was our first green light, validating our directional bias and telling us it's time to look for an entry. With our direction set, I marked a 15-minute fair value gap. a market inefficiency that acts as a magnet for price. This became my refined entry zone. I then dropped to the 3-minute chart, waited for price to pull back, and got my final signal, a bullish engulfing candle. This was my entry. The trade hit a fantastic 1-to-5 risk reward. That same day, I caught 2 more trades using the exact same method. 3 trades in one day, all following the same rules. This is the hybrid advantage. A pure swing trader might have only taken 1 trade that week. We find the balance, taking high-quality setups that offer significant returns without being chained to the charts or getting lost in noise. But here's the key. Unlimited opportunity is not unlimited execution. The charts constantly present temptations. The difference between a disciplined trader and a reckless one is a non-negotiable rule set. A reckless trader is driven by FOMO. A disciplined trader waits for their A+ setup, consults their checklist, and executes without emotion. Your rules are your business plan. My strict management rules are simple. 1. No trades outside 4 H points of interest. 2. Always require 15 M confirmation to filter noise. 3. Only execute on the 3M for precision. 4. Close the platform after execution to prevent emotional meddling. And 5. Minimum 1 to 3 risk reward on every trade. This ensures your winners pay for your losers. My journal is full of days where I saw 5 or 6 possible trades but only took the 2 or 3 that met every criterion. That's not a list of missed opportunities, it's a record of professional discipline. True profitability isn't found in catching every move, it's found in the unwavering, consistent execution of your proven plan. If you take one thing from this video, let it be this: process beats outcome. You can't control whether a single trade wins or loses, but you can control whether you followed your rules. The hybrid 4H, 15M, 3M method gives you a repeatable process to catch multiple trades per day without losing your edge. If you want me to create a full live trade video walking through my charts, comment below and let me know. Thanks for watching, and I'll see you in the next video where we dive even deeper into smart money concepts.